Welcome back. Stocks are up again this morning, extending that 1,200-point rally yesterday, the best day in more than 2 years after the consumer price index out. This morning, futures indicating a gain of 126 on the Dow. The Nasdaq is up 71. Joining me right now is LPL Financial's chief global strategist, Quincy Krosby. Quincy, thanks so much for being here. How do you assess what took place yesterday and this optimism that Wall Street saw in the CPI report?
Well, what it showed, obviously, is that finally you're starting to see inflation coming down. It's not great, as you pointed out. Food is still very expensive, gasoline. Nonetheless, it's starting to move. Well, one of the most interesting factors in here was the used cars, because that was the signal. Remember when we started looking at inflation, like, what is this about used cars? It started to move up dramatically. It's really coming down dramatically now. Across the board, we're seeing it pull back. It's not enough. The Fed knows this. They're going to have to keep going. And the fact of the matter is, consumers still have a high expectation of inflation over, 5 to 10 years. We'll see this morning if that is pulled back. But they need to get consumers to start seeing inflation pulling back. That's part of their job. And they still have to worry about wages. Wages are going up. They're not coming down. And companies are going to pass along these costs to us and, businesses. So that they have to fight that. And whether or not they start, quote unquote, stepping down, that's the word they use, to give us, say, 50 basis points, half a percentage in December 14th. That's what the market is expecting right now, that they'll go longer, but there will be smaller rate hikes.
Yeah, but Quincy, what does this all mean for the macro story? I mean, look at what is happening in housing right now because of 7% mortgage rates. We've got a big week ahead of earnings and economic data next week, and we will focus specifically on the consumer. We've got major retailers reporting, Walmart, Home Depot reporting on Tuesday, retail sales coming out on Friday. What's your expectation?
The expectation is that consumers are still spending, but they're being careful. It's interesting that Dollar General, Walmart, they're seeing households with $100,000 or more going into their stores for discounts, for food, for necessities. And what they're hoping is that these, higher wage earners go through the other aisles where the margins are higher. But that tells you that all Americans are trying to beat this inflation. It doesn't matter what your income is. You're trying to beat the inflation.
Yeah, exactly. Michael Lee, jump in here.
Yeah, hi, Quincy. Earnings for the fourth quarter on June 30th, the estimates were for 9.1% growth. Now the consensus is for a 1% decline. We're also looking at about $250 worth of earnings for 2023 in the S&P 500 for next year. Now that number's around 230. It seems to me with all the deterioration going on in the economy that 230's got to keep going down, and the Fed is most likely to be higher for longer. How is your outlook on the market? And what do you think? What do you make of yesterday's rally? Do you think it's a head fake, or do you think we continue to see strength and that the market can ride out this bad data?
Well, when price action is price action, if I go to turn in, ask to get my money back, I'm going to get it. But even true bull markets, that lead, that come from this, begin with short covering. So for everyone to say, well, it was a short covering rally, that's what really gave it the extra strength to climb higher. Well, so be it. It's whether or not we can continue this rally. Most likely, and this is part of history, statistics, the end of bear markets, as we come to the closer to the end, these rallies are ferocious. They're absolutely ferocious. And so probably we will need to digest this rally. We almost don't want to see it go up dramatically today. We want to see it digested. But there is one thing that was interesting yesterday. We started to see money coming out of the defensive sectors, from consumer staples to discretionary. Money went over to tech on the promise, the hope that interest rates keep coming down. That may be, a very long, drawn-out story, and maybe the market was ahead of itself. But nonetheless, if we get these inflation points coming down, we've got another one December 13th, you know, the market is going to say, hey, this is the beginning of the end of the inflation story. However, on the ground, not for the average American, this is going to be a drawn out story in terms of, you know, everyday living at the gas tank, at the supermarket.
So what do you do then? Do you want to buy stocks here, or should we be taking to the sidelines after this big rally?
Well, you know, if you're truly a long-term investor, meaning that this is for the next 10 years, you're not going to be looking every day. If we pull back a little bit more, you know, if we see selling into this, because a lot of people think, hey, this is not it. This is not the real thing. We may start to see selling into it. Begin building your position, but be sure to get companies that have cash flow, because as we just heard, you know, margins are being compressed. The earnings story is not getting better right now, by the way. It is getting worse. And so what you want to do is make sure you've got companies that have strong cash flow, maybe dividends, good dividends that will pay you. That's going to be, you know, how do I say? It's going to be a story that carries you. Also, remember, are we going to have a recession? I didn't hear anybody talking about that yesterday in the midst of this euphoria. Right now, it still looks as if a recession is in the cards.
Yeah, it certainly does. Quincy, it's good to see you this morning. Thanks very much.
Thank you.